Ja bym się nie nakręcał, zobacz. W pierwszym rzędzie masz coś do fotografii. Ja bym się nie przyzwyczajał do tego zdjęcia.
Ja muszę być blisko. Nigdy nie zapraszam.
Ale was też telefon. Halo, nie może udać. Thank you so much. A ty masz?
It was nice. Yes. Meeting after the informal meeting of Ministers of Finance with Polish Minister of Finance Andrzej Domański and Commissioner Valdis Dombrovskis. The floor is yours, Minister.
Second. Okay. Good afternoon, ladies and gentlemen. Today, finance ministers met to address the macroeconomic implication of the ongoing trade dispute. We acknowledged possible negative impact of trade dispute, rising tension on economic prosperity. Effects on GDP are expected to be stronger for US than for EU. Having said that, it's our duty to do whatever it takes to protect European people, to protect European citizens, to protect European companies. Ministers reaffirmed full support for a decisive yet calm and calculated approach of the European Commission. We see the Commission's decision of suspending retaliation measures as a good step into the good direction. We want to use the next 3 months to have a serious and constructive dialogue with the US. There was a unanimous agreement that we maintain a united European stance. Ministers reiterated the importance of protecting our citizens and businesses from unnecessary economic disruption. In the session with central banks, governors, we discussed boosting the competitiveness of European financial markets. There was a clear agreement that we need to move urgently with savings and investment union. This will address market fragmentation through unified regulations and stronger integration of the European capital markets. Today, everyone recognizes how critical the process is for enhancing EU's economic resilience against the external threats. There is a new urgency to speed up building of the savings and investment union, and this urgency is well recognized. Interestingly, it was also noted that the European financial system is nowadays a shock absorber and no longer a shock producer. The strength of the euro and relatively higher stability in the European financial markets with capital flying to Europe prove that Europe is stable. But of course, we remain vigilant. The discussion today highlighted Europe's attractiveness for investments, particularly equity financing, which is critical for innovation and growth in our economy. And it's absolutely critical for small and medium-sized companies. The message from today's meeting is clear. Europe's economic and financial strength relies on our calm approach and unity. In these turbulent times, we are united because unity is our strength. Tomorrow, we will continue with important discussion on defense financing, a conversation vital to Europe's security and stability. Thank you.
Thank you, Mr. Minister, and I would like to begin my remarks by thanking Minister Domański and Polish Presidency for your welcome here in Warsaw, and we are meeting in a symbolic place. This Army Museum documents Polish heroic history of resistance. Poles have paid high price for standing against tyranny and totalitarianism from Warsaw Uprising to Solidarność, and your courage serves as inspiration for all of us. Today we are once again at a pivotal moment in Europe's history. We are not only faced with hard security threats, but also threats to the international rules-based order that has been the engine for progress, peace and prosperity. Poland's history teaches us that in face of these threats, we must remain strong and united. Today, Poland is leading the way in Europe in investing in its defense and security capabilities and in providing Ukraine with the support it needs to fight for survival. Europe must urgently rebuild its defensive capabilities in face of grave security threats from Russia's aggression. This requires significant and sustained investment in defense capabilities and European defense industry. As Minister already mentioned, at tomorrow's ECOFIN meeting, we will discuss how, through the Commission's Rearm Europe plan and Readiness 2030, the EU will help facilitate this investment. Together, we can and will take responsibility for Europe's security and defense. Moving to trade, ministers continued and deepened their exchange on impact of the Trump administration's imposition of universal tariffs to almost the whole world. The main takeaways from the debate are there was a clear agreement that imposition of universal tariffs is wrong and will deeply hurt economic growth, consumers and businesses on both sides of the Atlantic. I would like to reiterate my message from earlier this afternoon that we are ready to negotiate, and therefore we welcome the 90 days pause on reciprocal tariffs above 10%, which creates a space for negotiations. So the EU has put on hold countermeasures for 90 days to give those negotiations a chance. However, it's important to note that the 10% reciprocal tariffs remain in place for almost all countries, and they still represent a blow to the global economy. And on top of this, the 25% tariffs on steel and aluminium, and also 25% tariffs on cars and car parts remain in place. The imposition of tariffs against the EU goes against the political and economical logic of deep and long-standing transatlantic trade partnership valued at 1.6 trillion euros in 2026 and being the largest in the world. This is why we continue to show restraint in our response. We do not wish to add to already unprecedented levels of uncertainty. We are ready to negotiate mutually acceptable outcome while defending our economic interests. However, all options remain on the table, and there are things which we need to do in parallel. So we'll continue to work on deepening the EU single market. That is our greatest economic strength. And today, Minister showed great commitment to enhancing our competitiveness and deepening our existing partnerships around the world, as well sealing new win-win deals with other partners. Finally, we had an exchange on Savings and Investments Union strategies that the Commission presented last month. The EU is equipped with a large pool of household savings of around 10 trillion euros in bank deposits. Europe's capacity to address current challenges demands significant and sustained investment. As you know, the Draghi report estimates these investment needs to stand to additional 750 to 800 billion euros per year. By developing better integrated capital markets, the Savings and Investments Union can effectively connect savings and investment needs. This creates a win-win scenario for citizens who stand to earn a higher return on their savings and the broader economy that will receive additional investments it needs. This includes improving access to finance to European SMEs. The Commission will take forward concrete actions to implement this strategy in the period ahead, and we look forward to continuing our engagement with Member States and other stakeholders to achieve the Savings and Investments Union objectives. Thank you.
Thank you very much. Now we open the floor for questions. Financial Times first.
Thank you very much. My question is for Minister Domanski. Germany has said that we should not hit services for which there are no European alternatives, because doing that would hurt us more than hurt the US if retaliation is necessary, if the negotiations fail. Do you think there should be areas that should be excluded from a potential retaliation from the EU? Thank you.
First of all, I believe it's absolutely crucial for us to remain united. United in our position, united in our negotiation. And this is why we fully support the Commission with its moves. Therefore, we would rather prefer to first hear the Commission official proposal and then to comment over it. We do believe that we must remain tools for further negotiation. So I would not comment on German position right now. What's the most important for us is to remain united, and I can assure all of you that ministers today show and express their full support for Commission in its negotiation with US.
Maybe to add a couple of words on this, we touched upon this question earlier today. As I was saying before, all options remain on the table, and we'll be discussing this with member states. And given the structure of our trade with US, where we are having a trade surplus in goods and trade deficit in services, obviously we also have to look at the services side. At the same time, it's important that at the end of the day we achieve a balanced outcome in terms of risks and challenges also our policy response causes across different member states.
Reuters, please.
Jan Stilczewski from Reuters. A question for both of you gentlemen. Was there any discussion about supporting concrete sectors that might be most affected in the European economy? Steel, aluminium, cars, timber, microchips, etc., with concrete sums of money. I think both Spain and Portugal have already announced packages of support for their economies. Is perhaps a loosening of state aid rules once again on the cards, or perhaps some other measures? Thank you.
On this question, so we were not now going in discussing situation in a specific sector. So indeed, we were focusing on the macroeconomic impact on the tariffs, impact on economic growth, impact on inflation, volatility in financial markets, which is this is causing. So we didn't have in-depth discussions on specific sectors, even though indeed some of the member state support measures which had been announced had been mentioned. In any case, from European Commission side, our first assessment is that we need to be somewhat cautious in our fiscal response. We had a COVID-19 pandemic, we had energy crisis linked with Russia's aggression in Ukraine, we face serious security challenges, and we already are having elevated deficit and debt levels. So we need to keep in mind also those fiscal sustainability considerations. At the same time, of course, we also need to follow developments in specific sectors and need to be able to intervene if needed. And it must be said that specific sectors you were mentioning, like steel and aluminium, cars, microchips and so on, they are already high on the European Union and European Commission's agenda. Most of our trade protection measures are actually in the area of steel and aluminium. We have launched strategic discussions on the future of automotive sector in the EU, and where obviously we need to factor in those new developments. We have a strategy how we are developing the chips industry, so it all already falls in certain work streams. So currently, as I was mentioning already before, the impact of the tariffs on the EU economy may be in a range of some 0.2% if there are no further escalations. And correspondingly, it's somewhat contained. So in our policy response, we need to keep those fiscal considerations in mind.
We agreed to coordinate our response. We need to remain calm, and our response must be really well thought. There is a willingness to invest more into our companies. Of course, we are following the situation. As you know, a couple of days ago, Prime Minister Tusk met with automotive sector in Warsaw. So we are vigilant, but definitely need to remain calm at this moment.
One more question, yes.
Edyta Piotrowska, News Seria. I would like to ask about, is it true that Poland is pressing the European Commission to accelerate the work at directive that would increase taxes on the tobacco products in the EU? This is what media in Brussels are saying. And is it in line with Prime Minister Tusk's delegatory agenda?
Sure. So we are, of course, asking our friends in Commission to accelerate work in many fields. Today we were discussing about savings and investment union, and it's true that so-called the tobacco directive hasn't been updated for many years. We are not putting any pressure, but of course there could be a further discussion on those directives. Here today we are discussing the need to accelerate work over savings and investment union, as we believe that, for example, securitization is a file that we would like to process it during the Polish presidency, and I talked to Commissioner Albuquerque about that also yesterday.
Good afternoon, Tommaso Gallavati, in Kronos, Italy. Question for Commissioner Dombrovskis, if I may, because the Italian government said that they would like to activate the general safeguard clause for the Stability Pact, and because of the dire economic situation. Do you think that it would be possible to activate the general safeguard clause in these circumstances? Thank you.
Yeah. Actually, we had been assessing this issue when we were looking also our policy response to current geopolitical developments and how we can strengthen our defense capabilities and defense industry. And one of the reasons why we opted for national escape clauses was that general escape clause requires a severe economic downturn in the EU or Euro area as a whole. And that condition was met in 2020 when we activated the general escape clause in the context of COVID-19 pandemic, but that condition is not met now. We still expect economic growth in the EU, and even with the effect of Trump tariffs. Therefore, we opted for national escape clauses because that also allows to respond to, so to say, unusual circumstances beyond government control, and that's where indeed the current geopolitical developments provide justification for these national escape clauses.
Hi, yes, Rick Rutten, NRC, thank you. Question for Minister Domanski. In the past months, Poland has been one of the countries most eager to offer an olive branch, so to say, in the negotiations with the US, like buying more weapons or buying more LNG from the US to change the trade balance. I'm wondering, at the end of this week, is there still something that you think that Europe can offer to the US? And do you really still think that is a strategy worth pursuing now that the US can seemingly change its strategy and demands every other week?
Poland is the country with probably the highest support for US in the whole European Union. Polish people like US. That's a fact. And it's also a fact that Poland has been buying lots of US military equipment because we early understood how important it is to take more responsibility for our European security. We do not treat it as an argument in this discussion. As I said, the negotiation is fully responsibility of the Commission, and we will remain united. Of course, there are plenty of tools that Commission can use, and we will be happy to discuss them. But our need to buy equipment, military equipment, is very logical. And this is also why Poland has been pressing for many, many months to have more flexible EU rules in terms of spending on defense. This is why we welcome the recent rearm proposal from the Commission, and we will discuss it tomorrow with other ministers.
Ja, Detlef Fechtner, Börsenzeitung, a German financial daily. Valdis Dombrovskis, question for you. Is there beyond, it's a little bit follow-up the question before, beyond buying LNG and beyond buying military equipment, are there any ideas that you had an exchange on what you can do in favor to convince the Americans in the trade dispute, like regulatory things? Do we have any concrete ideas for that? Thank you.
Thank you for this question. Certainly there are more ideas and more areas where we can cooperate closely. You mentioned indeed areas like energy, notably LNG, also cooperation as regards military equipment. But then, for example, we had been proposing now to US 0 tariffs on industrial goods. Because we believe that it's mutually beneficial approach. So this proposal from our side is on the table. So just to give one concrete example, on regulatory cooperation, indeed, we are open to discuss it. And as you remember, with the Biden administration, we had a Trade and Technology Council where we were discussing exactly these kind of things, also trade facilitation measures, how we can cooperate better, and we are ready to have these kind of discussions also with the Trump administration in a format of Trade and Technology Council or also in other format. So clearly there are more areas for cooperation than energy and military.
One more question, yes.
Mm-hmm. Good afternoon, Aleksander Kierowski, Polityka Insight. Question probably for Minister Domański. I would like to get back to the Savings and Investment Union. So first of all, to implement such mechanism, it would be necessary for member states to delegate some supervisory powers to the EU level from national level. So do you expect any reluctance of member states to do so? And if so, how do you expect it would be tackled? And second question, because the securitization market was indeed one of the priorities for the Polish presidency. So what is the timeline? When can we expect some details? And maybe you can tell us some details on what we can expect. Thank you.
So first on Savings and Investment Union, formerly known as Capital Market Union. The discussion about that is really, really old. It takes, it's 20 years that European politicians are discussing the need for better integrated capital markets. And frankly, little has been achieved so far. we are pragmatic. We are trying to make some progress at least. In terms of supervisory, we believe there is absolutely no room for the centralization. Having said that, there is a room for better coordination. And I believe that this is what member states would accept. We have some progress already achieved during Polish presidency, like, for example, settlement period. We are still waiting for the Commission proposal on securitization. I do hope that Polish presidency will be able to work on that file. I expect, and Commissioner Albuquerque told me that it should be presented during the second quarter.
Thank you very much. But one more question? Okay, last question.
Just a final question for Commissioner Dombrovskis then. We've heard a lot about the euro in the last few days and how it's perhaps taking on a new role and doing very well on the markets. Could you just tell us, what does that mean for European experts and competitiveness? Does it worry you that a strong euro might make European experts perhaps a bit less competitive?
As regards euro and international role of the euro, it's actually we touched also in today's discussion with the ministers on this topic. And from the European Commission side, we had been working already for a number of years on strengthening the international role of the euro, and this is a work which we are willing to advance. Because euro is already the world's second largest reserve currency, and from that point of view, there is certainly a scope to strengthen the euro's role. If you look already the share of euro in terms of reserve currency and compare it with a share of Eurozone in terms of the global GDP, you already see that Euro's share is larger. So it's indeed used as international currency. And from our side, we are willing to continue to work to see how this can be strengthened. Well, on specific interest rate developments, we are not commenting on not interest rate developments, on exchange rate developments, as the ECB is not targeting the exchange rate of the euro.
If I may on that, in recent days we noticed a huge spike in volatility not seen since the COVID outbreak, I believe. We saw equity markets plummet. We see oil and copper prices going massively down, pointing to a growing fear about global GDP growth. And at the same time, we see a massive US dollar depreciation and yields on US treasuries going up, hitting, I believe, today 4.4 for 10 years. So clearly, and for those who are following market, it's not often the case, yes, that both there is risk aversion going up and US dollar depreciation. So clearly we see something new, and Europe must be prepared. And this is why we do need to focus on savings and investment union, bringing back competitiveness to Europe, also supporting a level playing field for European companies, for European financial institutions. This is also why we need more of so-called independence. Many ministers were pointing today for the need of truly European payment system. So we notice that there is a change in the market, and the European Union will be for sure ready to respond. Thank you.
Thank you very much. We finished the press conference. Thank you. Have a good afternoon.
Pan Redaktor.